The Valley Current.
I loved your glasses. Is that special effects of some sort?
Setting.
They stole
Yes.
some ideas from Snapchat. That's interesting. So the glasses, I guess,
Exactly.
are part of the theft, right? And they do all sorts of other things to get people's attention. I guess it is about getting people's attention at the end of the day, isn't it? Right? That's funny.
So, some of these seem to work better than others.
Right. It's interesting. So let me ask you, Steve, do you think people...
I'm liking that.
Yeah. Do you think people are actually going to file tax returns that take advantage of all the CARES Act provisions, or do you think most people will be like, I really don't know? Because I know lawyers that have literally bought like RVs, like $100,000 RV, and they say they have a mobile office. And of course, they're probably using it on weekends. But they're using it supposedly as their separate office to meet clients, at sites and the like, because they don't have offices that are open. And they're justifying the write-off as kind of a business purchase of an office, because it is like a rolling office. And you could argue that there's a lot of businesses that don't have offices anymore because people don't want to show up in offices. So if you have an RV and you drive to the person's home or office or whatever you drive to, you could have all your stuff set up in the RV, and you could do a mobile consultation with the plexiglass and whatever else is set up in it, right? You could do all that and take photographs of it. And perhaps the IRS says, yeah, it sounds like a novel, reasonable way to run a business that's generating fee income from this sort of new way of doing business, right?
Absolutely. I think some popular authors have written books about lawyers operating mobile out of mobile home. And so there's a rule against luxury items. So if a mobile home is considered a luxury purchase, then it could potentially generate some headwind.
Well, these things are really big, and they usually have big diesel engines, and even the ones that aren't huge run like $50,000 to $100,000 even used. The really big ones run like $300,000 to $500,000. The ones that the bands use to take on tour. But conceptually, years ago, I remember in New York, even before I went to law school, there were these vans that would literally pull up at the courthouse, and they offered various legal services to unrepresented people as part of sort of a pro bono effort. And they would offer to even give assistance on how to post bail and that sort of thing. And they were like the old bread trucks, the really big sort of style boxy vans, like the UPS style vans. They weren't really for people to go into. It was more like they had books in there, and they probably had some computers and whatnot to try to print out stuff. And it was sort of like a food truck, but with a bunch of lawyers in it. And we used to all laugh, saying, that's a joke. But in a way, it's come full circle right now, because there are definitely more lawyers closing offices than there are lawyers opening physical offices. And a lot of lawyers are going totally virtual. In fact, the ABA statistic I saw recently, which just about had me fall off my chair, is 1/3 of all firms have no physical offices anymore. Like 1/3. That's a lot. I mean, that's a big number in the United States. I mean, I don't know what's going on in Europe. I think a lot of European lawyers have worked from home traditionally and have remained relatively small. But I don't think that's true in the accounting profession, but maybe that's happening in the accounting profession too, right?
there's probably more lawyers. It's easier probably for a lawyer to go completely virtual than for an accountant. But we're in a gray area as to deductibility, and you'd want to consult a tax professional to make sure that your I's are dotted and your T's are crossed. It would want to be um, in a certain category, and pro bono for an individual attorney is considered a charitable contribution, and there's a lot of limits to individual charitable contributions. So you might want to instead go through a business, and a business can potentially characterize this as charitable, in which case it might flow through to the, if it's a pass-through business, it might flow through, and again, you have limits and potential problems. If it's classified as a marketing expense, sometimes a pro bono program could be a legitimate marketing activity,
Right.
then perhaps it might not be subject to the charitable restrictions. But again, it's a case law research question for a tax professional based on your specific facts and circumstances. As in these novels, if you are an attorney who's made enough enemies that somebody might potentially burn down a physical office or take shots at a physical office, then you'd certainly have an excuse for going mobile for security reasons.
Well, I think the reason more lawyers are going virtual is their staff doesn't really want to show up to an office. It's like people have gotten into the mode of I can do whatever number of productive hours that people do from home on my own schedule, more or less, because no one is looking at what time I arrive or what time I leave or how long my lunches are, whether I take a nap in the middle of the day. I basically have more autonomy. And of course, if you're managing people, you're always wondering, are they really being productive? Are they goofing off? Are they focusing? Are they self-starting? I mean, in knowledge work, it's very hard to define how that work is efficient or isn't efficient. I mean, look, I myself sometimes take a swim in the middle of the afternoon because I find it gives me ideas for cases. I don't bill that time, but an hour in the pool can sometimes actually be worth 3 hours sitting at a desk in terms of the ideas that occur for angles on cases and what to anticipate and so on. Now, am I literally producing, a brief? No, but I'm cogitating on what elements need to be covered and how they might best be covered or summarized. And certainly when the writing gets done right after that dip in the water, it usually does go a lot faster. I'm sure the client would say, I don't want to pay for the pool hour, but I'll certainly pay for the 15 minutes that it took to write up that letter, which seemed to just flow. The words seemed to just flow, right?
The corporations and the productivity analysts who came up with the original 40-hour work week, there's a lot of literature on that, including from Deming and others. But they discovered that there was a trade-off, and once you start exceeding a certain number of hours, around 40, the additional hours become counterproductive because of burnout. And that the corporations were actually getting more total productivity from their employees with a 40-hour work week versus a longer work week over sustained periods. So you could have brief periods with longer work week being productive, but over a long-term sustained effort, work weeks above 40 were found to be counterproductive.
Well, the investment bankers are getting a dose of it because the younger associates are all protesting about doing 100 to 120 hours a week and not getting enough sleep. So there was something on the news this morning that one of the investment banking firms said, okay, we hear you loud and clear. We're going to pass a rule that no work after midnight. You have to stop at midnight. You have to go home by midnight, unless your direct team manager tells you an exception is being made. Now, these are not people that are getting paid double time or triple time or overtime or anything like that, but they are people that are effectively saying, hey, we're burning out here. And they're like, okay, well, we'll cut it back from 120 hours a week to maybe more like 90 or some number like that. But I do think a lot of that work tends to be kind of drone-like work that should not be billed by those investment bankers. And they don't usually bill it either. The odd thing is that they work on sort of an incentive commission. So all of this sort of hours is sort of a strange way to justify whatever pecking order is being organized by the firm, because ultimately deals get made over lunch or dinner or however they get made by the executives making them, and all the rest of this paperwork is just a lot of CYA, making
Right,
sure
right.
I's are dotted and T's are crossed. And whenever you're merging two businesses together or taking a company public, there's usually so many skeletons somewhere in some closet. Bernie Madoff died, I guess, the day before yesterday, and there was a guy that was literally the chairman of NASDAQ negotiating with the SEC about regulation, and he is like the fox in the henhouse, basically doing a scheme that Ponzi would view as a PhD in putting together a Ponzi scheme. In fact, people are saying maybe it's more of a Madoff scheme and Ponzi has been outplaced. But he apparently went to his grave telling people it really wasn't his fault, that he was being pressured by his banks and customers to give them numbers that really were hard to believe. And there was some accountant that apparently ferreted this all out and gave the SEC all the findings, and the SEC more or less ignored it. I don't know that anyone got fired at the SEC for this, but it's a major scheme that is still, to some degree, not been fully unraveled. I think there's still litigation going on over it.
I noticed that also, that the SEC period was in the early 90s, and some people who worked for him, one guy who started in 75 said that the corruption was there throughout his tenure. So the corruption started at least 25 years before the SEC service.
I mean, you have to wonder like who was auditing the Madoff firm, whatever the name of the securities firm, I think it was called Madoff and Family or Madoff and Associates, who was doing that audit, and how badly did they get tagged in this, or how badly did their insurance get tagged in this, right? Because
Well, it turns out that it was a single operator at a strip mall in a sole proprietorship with no staff.
is that
And
really?
that's right. And I believe he went to jail. I don't have the details in the top of my head, but I think there was accountability that this
Oh,
guy,
you're you're
CPA,
you're
lost
you're
his license.
you're saying it was a guy that had a CPA license, but more or less was winking and nodding and letting Madoff get away with what was obviously fraud, or did Madoff defraud him as well?
It was a CPA who was definitely incompetent and in over his head. He was not competent to audit a business with the complexity of the Manoff operation.
Right.
And there was a lack of compliance on the CPA part as well. So I think that the CPA was rightfully penalized for
Disbarred
his part, but
and maybe put behind bars as well.
right, but the details of the punishment to the CPA are not in the front of my head. Today
Okay.
being April 15th,
Right. This would normally be a critical date, but you extend everyone out, right?
no, it still was a critical day for entities. So the trusts and the C corporations needed attention today. And I just found that a whole lot of my individual clients called me essentially wanting their hand to be held because, hey, today is April 15th. I'm nervous. Have we done everything that we need to do?
But
And
I thought the entities were due on March 15th.
the S corporation, the pass-through entities are due on March, but the independent entities, the trusts and the C corporations, all were due today.
Is
So
that by the extension that was given, or is that just normal?
That's normal, and they were not extended. Only the individuals were extended. So
Okay.
we extended our pass-through entities a month ago, and the individuals will get extended next month. But all the separate entities, which means C corporate, 1120, and uh, trust 1041 returns got filed today. And
Interesting.
so, and we still have a lot of 1040 clients coming to us today asking for their hands to be held, basically comfort calls, having to do with estimated tax payments and just, I'm nervous, please hold my hand.
Right.
Except they put that in a more technical presentation.
Right.
And
You think,
unfortunately, with COVID, it's hard to hold people's hands literally.
right.
So
Do you think in general business people have done better uh, than expected in calendar year 2020, all things considered, all the, other than restaurants and the like, which I'm sure took quite a bath. Do you think other small businesses uh, basically did beyond expectations? Kind of the way the banks reported today, and the banks all reported on Wall Street great results last
well,
year.
I think it's a mix. So, of the people who continue to come to me, I'd say that they're doing better than average, but that's not a fair statistical selection
Hmm.
because I lost 5 to 10% of my clients and can only assume that they're dead or doing extremely badly or had no income whatsoever and don't need my services and didn't bother to. And I had a few emails like that from people who said, I won't need you this year, but thanks for everything and I'll be back the following year. But it's still not a statistical sample because the people who need tax help are the people who owe taxes. People who owe taxes are the people who made money.
Yeah, I mean, it's an interesting situation. If you look at the big banks that reported today on Wall Street, they all apparently have blowout earnings. Bank of America, amazing results, and Goldman Sachs and others. And you have to wonder, like, why did that happen, or how did that happen? Because I would just generally think that with the slowdown, there would be just less banking. Everyone would be staying at home, kind of, you know, sort of shrinking their consumption. But apparently, um, the opposite occurred. I mean, it's sort of hard to get your arms around this, because normally, um, at least in my way of thinking, when you're at home, you're not spending money. You're watching the same TV, or you're reading the same book. You're burning maybe a little more electricity. You're spending more time on the computer, but you're not buying first class tickets to Hawaii, and you're not reserving hotel rooms, and you're not going to Vegas to gamble. I mean, there's so many things you're not doing. I would think in general, consumption would be way down. But these banks are saying there was a lot of stuff going on last year that reported allowed them to report bigger numbers. I don't know if that just represents kind of this perverse fact that the economy can run even with a lot of people not traversing the streets and going into retail or into buildings, and it can run well.
I think the stimulus has been working to some extent. To another extent, I think there's a sampling issue because there's people like Carnival Cruise Lines who are completely devastated. And the reporters don't like to write about stories like that. They prefer to write about Zoom or the people who are on the successful side of the events.
Right. I mean, look, from a courthouse point of view, I think the lawyers that got hit the hardest are the personal injury lawyers. And the reason is they can't settle cases without getting trial dates. If they can't get a trial date, there's no real pressure point for an insurance company or a defendant to pay a reasonable settlement. So, in a way, the year that we've gone through since last March, maybe a year and a half before the courts really open, maybe even 2 years, depending on how the backlog goes between criminal and civil. Those personal injury lawyers, I just think they suffered. I don't think they were able to make deals. I think they sort of minded their docket of cases and maybe took some new cases and maybe even filed the new cases, but I don't think they actually got to the table with most parties, or particularly insurance carriers, because the carriers can say, we don't need to pay them until we actually have to pay them, which is usually like the week before trial, sometimes the day before trial, sometimes the hour before the trial starts, sometimes literally right after the jury gets selected, because they can tell the jury looks like it's crying already, or the jury looks like it's leaning in favor of a plaintiff. So it's an interesting time, I think, and someone's going to write a book at some point, I'm sure, that goes through the entire cross section of professionals and says something about like who really took it on the chin the worst. Like, I think, for example, the divorce lawyers got hammered too, because I think a lot of people were like, I can't move out. I'm not going to get divorced because I don't know where to move to, because it's not even that easy to find a new place to move to, because no one's showing property and everyone is sort of locked in, which says that there probably will be a spike in those filings within the next few months as people start to imagine they have a little more freedom than what existed before. So I'm sure at some point there'll be some really interesting reports. So reading about stuff that finally gets released about the JFK assassination decades later. They finally release all the data, and you get to maybe understand what really happened. Although that's something we'll perhaps never really know.
I do have a higher percentage of divorced or divorcing clients than usual. I guess about 4%.
Only 4%, because I think the actual numbers are more like 50 to 60%. When you think about most businesses, other than say the mega businesses like Apple and Google and Amazon and Microsoft that have literally tax departments inside their CFO offices. I mean, they literally are sort of like running the business from the point of view of taxes are a big component to sort of reckon with, almost like that's a big strategy that's going to affect how the numbers go. But other than those big businesses, most smaller businesses, I don't know that they really even have a clue to how to put together a tax strategy for the business. What are your thoughts generally on that?
Yes, I tend to think that to some extent what you say is true, and it's very case specific. But some people recognize that that they don't know what they don't know,
Right.
and if the dollar amounts are large and the tax professional is competent and ethical and only takes clients that are a good fit where there's good work to be done, then a tax person can easily generate 10 times their fees in savings. You know, the IRS has calculated the tax collections potential, the tax gap, and the cost benefit of hiring additional accountants. And for every dollar they would spend on increasing their staff, the government revenue would go up by $10.
Right, because there's a belief that there's a lot of tax fraud, or a lot of negligence, or a lot of mistakes, or whatever you want to call it. But like, let's imagine a world where entrepreneur, a guy or gal, I mean, I'm just going to give you this example because this is what motivated the conversation tonight. Was we saw this brochure that argued there's at least 10 mistakes that people make in planning their retirement, and it made me think there's way more than 10 mistakes that people make in planning their financial life generally. Forget about retirement, just generally speaking. So take someone that gets out of Stanford Medical School or Stanford Business School or even Stanford undergraduate, and they come and they say, okay, now I'm going to get my first job or my first source of income, whatever that is, my first occupation. What should I be doing? like immediately, I think you would tick off a bunch of stuff for them to consider. That's sort of low hanging fruit. Like, have you considered starting a Roth IRA? Have you considered starting a 529 plan? Have you considered, stashing some money away in some tax uh, beneficial way? And most of these people are like, no, I'm just trying to figure out how to get my first apartment and where I'm going to get the deposit money for the first month's rent and the security deposit. They're not thinking in that, what I would call that much bigger picture way. And I don't know that there's anything that happens in college or high school to sort of suggest to them, this is what you should be thinking, this is what you should be doing, this is how you should be thinking about stashing some money away in sort of a dollar cost averaging basis into, say, a stock market or an ETF or something like that. But do you think that in America, we do a good job of what I'll call financial literacy? Because I don't think we do a good job of health literacy. I don't think we do a good job of financial literacy. I don't think we do a good job of marriage literacy. I don't think we do a good job of parenting literacy. And you might say I'm being super critical, but I just, that memo from that guy who said there's at least 10 mistakes you're going to make going into retirement. I thought, that's like a footnote to the much bigger mistakes that people make, years earlier, even before they start thinking about retirement. What do you
Well,
think?
Jack, you've breached a whole lot of doors. You've opened a whole lot of doors for
Like Pandora's
discussion.
box. I've
Um,
opened Pandora's box
and
here.
I'd like to say that people don't know what they don't know. In general, a W-2 situation is reasonably simple if all that's involved is a relatively small dollar W-2. But I just had a client come to me who wanted me to look at a self-prepared tax return and comment on it. And I just
Okay.
charged a few $100s for that.
Right.
And I found $7,000 in overpayment, in tax overpayment.
Untaken deductions or
And the biggest piece of it, there were two pieces of it. One was that the Schedule D basis was not what it should have been. And I think some of the gain was being treated as short term when it should have been treated as long term. But that was about 3,000, and then about 5,000 had to do with a nanny, a home nanny situation. And the taxes that you pay um, for your home nanny are creditable to the overall tax that you owe. But he did not, this client, who's a brilliant engineer, did not realize that this payment of taxes to the nanny was a credit to
and the
his tax.
turbo tax type software didn't pick it up.
That's right. So, he pays me, $400 and he gets back 7,000.
Well,
So
that's a 15-to-1 ratio. That's pretty good.
that is,
Me,
that
right?
is, and for larger clients, there might be a bias that the errors are more in the client's favor. And so the injured party, the government, is the one that economically is motivated to hire more enforcement and collection and tax representatives. But for smaller clients who don't really have a strategy, the errors are pretty split both ways. And so I've had clients where I was able to save them 100,000 or $1 million. And over my career, I've probably saved about $130 million of potential client taxes that they would have overpaid without me.
And those numbers will probably go way up as you uh, become more mature in your practice, because you'll get bigger and bigger clients and you'll save them more and more money. But just generally speaking, when you did a review like that, do you throw out things like, you should have put some money into a Roth IRA, or you should really have started a 529 plan for your child?
I sometimes do it, and really we have more time for this if the client comes to us early and not weeks before the deadline, which is
Right.
often the case. I usually tell the client to avoid Roth IRA. So I have a 3-to-1 ratio of clients who are using Roth and should not be using Roth because some uninformed person told them, hey, use a Roth. And in fact, that was bad advice. And that's a much more common mistake than the other of using traditional IRA when a Roth would be better. And Roth has only been advantageous to maybe a half dozen clients in my whole career. The purpose of a Roth, as a real quick aside, is when you have a really bad year and you want to accelerate tax into the bad year because your tax rates are so low. And any other situation, a W-2 employee is often doing themselves a disservice if they attempt to use Roth. They're
Well,
often better off just
I mean,
putting
look
the
at,
money in a savings account for a bad year and then making the Roth contribution in that bad year.
right,
Not,
but look at the results, say, of if you could, just theoretically, I know you need earned income to do it, but if you have a child and you somehow could get the child to have earned income, which is not impossible, because I know people who say, hey, if I take photos of the child, then the child has earned income based on the photographs. I've seen people argue that, or argue that videos. I mean, people come up with very creative ways that the IRS attacks, sometimes successfully, sometimes not. But if that child does earn whatever is the maximum amount that can go in the Roth, that's also under the radar of the amount taxable. I think it's like $7,000 in a given tax year, that's both under the poverty line for no taxing of income, but can go into the Roth. And imagine that 7,000 each year magically went into, and I know this is a hard asset to get it into because very few IRA custodians will do it, but imagine it had gone into cryptocurrency 10 or 15 years ago, when cryptocurrency like Bitcoin first came out. A Bitcoin is now 62 or $63,000. And imagine over the period of, year 1 to year 15 or 16, that $7,000 a year was turned into cryptocurrency purchasing, whether Bitcoin or ETH or any of the gazillion different coins that are out there. I have to believe that Roth IRA would be worth like tens of millions of dollars today. I don't think there is anyone that's raising their hand saying, I did exactly that. I followed that advice and I got a Coinbase account.
I'm not going to touch that because of a lot of reasons. One of which I'm not going to go there. It would fill up the whole period.
Right, no, but you get the drift
But-
of what might be called perfect planning, right?
Let me say just this one thing, which is that, and I think this lends a great deal of light into that whole situation, and that is every week I get approached by at least two financial planners. That means every 3 days of my life, a financial planner approaches me and attempts to bribe me to send prospective clients to them.
Bribe you with like fancy dinners or something like that?
Yeah, with all sorts of things. Additional income, business opportunity. Let me take you to lunch, et cetera, et cetera, et
Yeah,
cetera.
that's not bribing. That's called marketing, man. That's just marketing. I mean, bribing would be giving you a cash referral fee or some sort of
That too.
cash commission.
They would
Right.
love to they offer me referral fees.
Right.
Absolutely.
Right.
Let me show you how you can generate an additional, X $1,000 a year of revenue.
Yeah, I mean, they're doing what advanced marketers are
Yeah.
trying to teach people
Then
to do, which you're saying is over the
I-
line.
it is over the line. So there's two issues about it. One is that it's not only over the line, it's out of the ballpark.
Right.
And then number two is that where do they get the money to offer me all these bribes?
Oh, because they're making money from their clients in whatever they're doing, right? Whatever they're selling. I mean, look, the classic stockbroker that pretends to be a financial advisor is pushing purchase of stocks for commissions. I mean, that's what they're doing. if you tell them, hey, I just got a big, recovery from a personal injury case, and I'm going to put it with your securities firm, they're like lit up about that because they see commissions in buying and selling stocks all day long. And you could argue that um, these commission-free electronic accounts were the perfect antidote to that kind of activity because there was a lot of churning that was going on. And I think there are a lot of people that said over the long haul, forget about, cryptocurrency, just put it into a set of, of exchange traded funds, ETFs that are indexed to the market, and let the market do its wonders, whether you pick S&P 500 or you pick NASDAQ or you pick, any of the various markets as how they're defined in ETFs. They're sliced and diced in a million ways. And to a large extent, you avoid paying all these fees because the ETFs are basically fee free and follow indexes. So there's a very tiny, tiny transaction cost. And then you just close your eyes and let it run. And you don't
Now,
interact, right? You don't interact with it at all.
ideally, you're making these contributions very slowly because otherwise, everybody during boom times or during stimulus times has too much money and doesn't know what to do with it. And
Right.
so everybody's um, um, buying stocks all at once, and the stocks are inflated above market.
Well, that's
And
what's happened. That's what's happened now, right? Isn't it really
right.
what's happened
And
now?
so ideally, right now, you want to be more contrarian and slow down your purchase of investments so that your and purchase of investments gets balanced between times when the market is at all-time highs um, and times and fueled by things like Bitcoin
Right.
and times when the market is much more reasonable. I think the Bitcoin effect is quite interesting because a lot of cryptocurrency uh, people, for various reasons, have lost the passwords to their wallets,
Right.
or the company that held the wallet has gone bankrupt
Right.
or
Right.
otherwise doesn't exist. So that the capitalization of that Bitcoin is really being overstated if you count all the potential money in wallets, because a lot of that money really doesn't exist.
Yeah, but let me get back to what I would call is the hoped for topic that we hopefully will spend a few sessions on, which is if I'm advising like my daughter out of high school, I think the start of that advice should probably be in grade school. So let's go to my grandkids and take them in grade school. I would think somebody would make a fortune putting together an app with a few video lessons for kids in even the second and third grade about very basic concepts of saving and frugality, and even to the extent of if a phone is broken, like I dropped my iPhone, of course, for the 50th time, and finally the entire thing just literally splattered all over the floor. Interestingly enough, the iPhone still lit up and the phone service part worked. It was the smartphone part of it with the you know icons was gone, but the phone worked because the phone rang and I picked up the phone and the speaker still worked. So I went into the Verizon store and the guy was like, yeah, you should just like replace the phone. Now it's a $1,200 phone and we could stretch the payments over time. And the guy was honest enough, I got to give him credit. He said, but you can actually take this phone to a repair shop and for $100 they'll replace and they'll fix it like it's new. And sure enough, I decided to do that. Now you might say maybe I'm a contrarian because there are a lot of people in my quote unquote status that would say just buy an iPhone, whatever it is, 12 or 13 and upgrade. And I've got this old iPhone 10. It's very serviceable, but the screen completely shattered. But I ended up deciding to go and get the screen replaced. Now, uh, you know, I think there are a lot of people, including my wife, who says you're nuts, because you drove an hour or half hour back and forth to the place to fix it and you lost time and so on. But I just couldn't see throwing that device in the garbage. Now, if you look at it as, this is what I learned in grade school and what I learned in a middle class, blue collar working family, that you don't squander things. But I think there could be what used to be called civics lessons or good housekeeping lessons, or what might be called
Home economics.
home economics 101, which are a little bit like, how do you take the resources you have and amplify them in smart ways? And I think along those lines, it becomes, if you could afford to buy your first starter home, and maybe it's just a mobile home, like crazy idea, but there are mobile homes that go up in value. And that mobile home, I think, is still treated like a piece of real estate from the point of view of IRC 121, right? If you're selling it and you have gain from it, I presume, because it's on dirt and it has title, you can sell the whole kit and caboodle and then get that gain tax free. I think there's like simple things like that that we don't educate our young people about. Yet embedded into the Internal Revenue Code are these various wealth producing approaches that are, you learn about them almost too late. Like, you think to yourself, God, I wish I knew that when I moved out of my parents' house. I would have probably bought myself a mobile home as my first home, because the gain would have been tax free when I finally graduated from college and I sold it. And I
Well,
would have an appreciating asset as opposed to paying rent.
absolutely. I had to explain to another accountant who maybe should have known this, the difference between a townhouse and a mobile home. That in both cases, the resident does not own the dirt, but with the townhouse, the dirt is owned by a nonprofit HOA,
Right,
and the resident owns or has voting control over a piece of that HOA.
right.
Whereas with the mobile home, it's owned by a for-profit entity that is not motivated to provide the best service at a reasonable price, but to milk you for whatever they can.
But the home, even if it's on a location that's owned by the park owner,
But yes,
that you're paying rent to, isn't the gain from the sale of that
absolutely, yes.
resident, it's still IRC 121, even though you could argue, well, it's kind of like a trailer and it's kind of like a portable house. But the truth is, the fact that it's fixed to a piece of dirt, however that dirt is owned, enables a view that that's a residence. And if it's your only residence, it's your primary residence, right? So if you
Well,
hold it for
capital
2 years.
gain does, this is I agree with everything you said. And I might add that capital gain and like kind exchange rules and all sorts of other benefits apply to stock and to collectibles as well as to real estate.
Right.
So whether you own the dirt or not does not affect the tax treatment.
Right, but I was just focusing on, for the sake of argument, IRC 121, which is not completely well understood. But interestingly enough, there was an article published in a major journal recently, which I thought, man, these authors are right on. The authors argued that the redlining that had happened by banks that excluded blacks and minorities from getting loans on real estate actually caused a lot of the wealth disparity, because the couples and singletons that should have gotten the loans and should have owned real estate but didn't, couldn't take advantage of the IRC 121 tax-free advantages on the first 250 if you're single, or the first 500 if you're married. So blacks and minorities that couldn't get those loans to get the primary residence, as opposed to being a renter, lost out for generations. And in many ways, what I haven't seen, even though it's in the papers constantly, that Congress is looking at a reparations law to deal with disparities that arose from the Civil War, it probably isn't really from the Civil War. It's probably from the way banks discriminated against minorities, and minorities weren't able to get the advantages baked into the tax code that whites were able to get, or non-minorities were able to get over a fairly lengthy period of time, because my parents, ever since I was born, always owned the primary residence. They moved up and they sold and they made a bunch of money tax free, and they replanted that money into their next residence and they made money on that. And I can't count the number of residences, but I'm sure it was, at least while I was growing up, at least 4 or 5. And I guess the rule is you have to hold for 2 years. So in theory, you could, over a lifetime, have potentially 30 or 40 different primary residences that you've played this IRC 121 game with, right? But I don't know people that really time it that way. I think if someone's satisfied with their primary residence, they stay there, often for a lengthy period of time. But from a tax point of view, you're actually motivated to move next door, because you'll be in the same neighborhood and you'll be able to start the clock running on the next improvement thing, right? If you think about it from that point of view.
Yes, yes. Let me add to that just the prevalence in that neighborhood, perhaps, of tech advance places.
Right.
And just there's sort of there used to be some laws of on usury and unreasonable interest rate, but anybody who's um, living week to week on paycheck advances, or who's taking advance refunds of tax, should be looking at the interest rate that they pay. And in
Right,
general, in fact,
because they're getting hosed. I mean, they're
they're getting
getting
hosed.
totally hosed. Right, right.
That's right.
And it's become a big business, and now it's become a big business because, like, literally there are firms that are delivering through an app an ability to get like a daily advance, but with a pretty significant charge. Now, whether those charges over time get reduced as technology lowers the friction, that's an open question. But in general, I would say, if I were a left winger, which I'm not, but if I were a left winger arguing for this reparation stuff, I would actually tie all of these various ways in which people with limited resources didn't get the advantages that financial literacy might have gotten them, and now maybe finally is getting them. And there was essentially a disparate treatment over a lengthy period of time. And I'm sure that's even true for immigrants as well, including probably even my parents' parents back in the day when they could barely speak English. It probably took a while for them to convince somebody to sell them a house. And so arguably they also suffered too, but they're long gone to complain about it. Outlining here is the beginning of a course that's sort of like a course in financial miracles, or a course in financial literacy, that I think more and more somebody's got to put together. Now, maybe it's not going to be us, but I do think when I see new business people come in and I ask them some basic questions about the business, and then eventually ask them, well, what are you doing for yourself? How are you thinking about your own wealth, and so on? And oftentimes they're just so focused on the business. They're like, I don't want to deal with that. I just got to get this business off the ground. Don't make any suggestions about it. And yet, you feel like you should at least tell them, look, you're starting a new S Corp. It's going to be a flow through entity. What are you doing with that money when it flows through? Where is it going, and how is it going to be able to either be used to improve your financial condition, or to offer ways for you to actually diversify, so it's not just a one business kind of, everything is betting the farm on whether or not you'll be successful. Like, I think Bezos and his wife at the time, now divorced, I think they did probably bet the farm on Amazon when he created the business plan and said, this is where I'm going to put my wealth and put my stake in the ground. I'm sure they're far more diversified now. than they were, 25 years ago when they started the business. Now it's a mega success, of course, and it seems like it's unstoppable. So you tell me if you find something that actually does this, because so far I haven't found it, but you might say, oh, yeah, there's all these dummies books about, you know, financial literacy for dummies and, plan your retirement from an early age and so on. But a lot of people just don't want to think of it that way.
Jack, there are steps in this direction. Unfortunately, many of the steps I see are from the same people who come visit me offering bribes
So
to
they've
buy
lost
my clients. And
they've lost all they've
also,
lost all credibility. They've lost all
they have,
credibility.
but these are the same people who are spending money on financial literacy training for potential clients. And
These are people that are burning other people's money off,
yes,
right?
yes.
And they're also not capable of doing that. I mean, there's my calling card. If I can do that, I could solve I I could solve your legal problems dramatically by doing that. But anyway, conceptually, I wanted to put this on the table because I do think part of me thinks that there is a program that's part of growing something, when you talk about growing a business, that's really about growing also your own sense of financial stability in your own life as you grow the business and as you try to make sure that you're protecting the business and protecting your own sort of financial life, because a corporation is designed for limited liability so that you're not personally liable. But a lot of people, unfortunately, don't take all the right steps to make sure that they don't end up commingling their personal life into the business in a way that creates an alter ego or what sometimes piercing the corporate veil. So forming the business is itself an asset protection step, but there's more than that that's got to go into it. And certainly a big part of it is the tax and overall financial planning, for sure.
Absolutely. And one thing I'll just emphasize as probably point number one um, on that chapter is that you're always better off filing your tax return, no matter how bad your situation is, no matter how much you think you might owe. Filing a tax return quantifies the amount that you owe, and
Rather than hiding it,
than
like you're not going
ignoring the duty to file the tax return.
right,
Certainly deliberately ignoring the duty to file
right,
is potentially criminal.
right,
And in this country, you can mismanage your money and the taxes and you don't go to jail. You just have to possibly pay it back over an extended period of time.
right,
But having filed, you start the clock on the time for the government to audit your filing, and you
right,
start the clock on the potential discharge in bankruptcy.
right,
If you don't file, things are often, things tend to build up psychologically. And
right.
there's this fear of taxes. I had one guy come to me with 12 years of back taxes just a few weeks ago, and a big potential mess. And I called the IRS. I got the power of attorney to have a conversation with the IRS about this guy's account. And of the 12 years, there was only 1 year where the IRS shows any income for this guy.
Right.
So instead of suddenly this huge 12-year mess, we only have 1 year of back taxes
Right.
to,
You're saying
complete.
from the point of view of what the IRS has, like W-2 or
Right.
1099 reports on, right?
So the situation was at least 12 times better than
Yes.
this guy thought it was
Right.
coming to me.
Right.
And unless you take the initiative to actually file, or if it's complicated beyond your ability to file, or you have concerns, or you don't know what you don't know, come to a tax professional, whether
Right.
it be me or somebody else.
Right.
And I'd say that the chances are greater than average, unless you're a very competent person in a very specialized situation, which I've been involved with as well, and I've been able to help them too. But unless that describes you, you're much better off knowing
Yes.
what your situation is. I often deal with both personally and professionally, have dealt with change and the process of change. And I personally believe that change has 4 steps. We start out being in an unconscious situation where we're not sure what's going on, but it's not going well.
Yes.
And from there, the very first step is to become conscious of what our situation is.
Right.
Before we can stop smoking, for example, we must become aware of the unconscious chain smoking. You know,
Right.
get people who come to me who smoke and they aren't aware, they don't enjoy the smoking. They're
Right.
not even aware that they went through a pack of cigarettes. It was completely the habit was so ingrained that it was completely unconscious. And I think that before we can make a change, be it in smoking, be it in diet, be it in interpersonal relationships, or be it in racial wealth disparity, or discrimination and bias, we need to first become conscious of what the situation is before we can fix the problem.
Right. Well, Steve, how do people reach you? What's the best way? Email, I would think, right?
Yes, it's Steve Rabin, R-A-B as in Bravo, I-N, and my email is srabin, first initial last name, at srabin.com. My website is www.srabin.com or www.taxservice2u.com, and that can be spelled with the number 2 on the letter
Okay.
U.
Thanks, Steve. Thanks for your time tonight. We'll pick it up next week because there's a lot of Pandora's box that we opened here, and I'll make a more detailed outline of various ideas that we could touch upon in a more systematic way, because I think there's a lot on the table that needs to be orchestrated.
Let's make the whole cryptocurrency a whole separate event.
Right.
Because,
Well,
there's so much.
it's very timely because there's a lot going on right now. Coinbase just went public, and I think it's got a valuation higher than most banks at this point.
Crazy,
Traditional
crazy
banks.
high.
It's huge. I think it's like one of the top 50 companies
Right.
out there.
If I was a gambler, I'd sell it short if the options are open yet.
Right.